Hello, here's the trading guide. Today I want to show you a simple pullback trading strategy for beginners that I used on a 10K account to check if I can pass an FTMO challenge. Instead of a backtest, I use real trades with paper trading in TradingView because a backtest on historical data is not realistic even when using replay. The rules for the FTMO challenge for the 10K account here are very simple. The trading period is 30 days and you have to trade 10 days. Your daily loss must not exceed $500 and your maximum loss has to be lower than 1K. In the end, your profit has to be at least 10%. Okay, so let's go to TradingView to see the trades that I took. I'm using the Heikin Ashi chart in this pullback trading strategy because it really helps to spot the price movement and market structure. You don't see the real price with the Heikin Ashi, but I'll come back to this in a moment. Here are the trades. You can't fake this. This is paper trading. I took 22 trades and I only used this trading strategy. I had 18 wins and 4 losses, started with 10K, and after 10 days the balance was 11K. The trading fees are included. Okay, so let's have a look at the indicators that I used. The first one is my own indicator called the 4 EMA. And after activating it, you get 4 EMAs, and I use the 8, the 20, the 50 and the 100. In a second, I will explain how to use it. The next one is the Stochastics RSI, which is an inbuilt indicator for TradingView. And the last indicator is the higher high, lower low, that helps you to see the latest highs and lows in the chart. You find the indicators when you click on Indicators, and then you search, for example here, the higher high, lower lows. This one here. I set the line style to solid, and for the styles I disabled everything except the lines to see the lows and the highs. The Stochastics RSI you can find here, and I use the default settings. And you can type 4 - EMA to find my 4 EMA trend indicator. And you see here in the inputs I use the 8, the 20, the 50 and the 100 EMAs. Okay, so let's come to the strategy. This is the Euro USD 30 minutes chart, and what we are searching for is a strong movement to the upside or the downside. Here we have a movement to the downside, red candles, and then we can see a pullback, in this case green candles getting smaller and smaller. And what I expect then is price going down again after this pullback. And this is where the EMAs come into play. The red and the blue one, the 8 and the 20 EMA are kind of squeezing together. And when price is breaking the 8 EMA to the downside, this is a potential entry. What I also want to see is the stochastics being overbought, because we want to sell in this case. But then I want to see to which price level I can plan the trade where I can take profit. So I activate the higher highs, higher lows indicator. And this helps us to see the previous low so that we can plan the trade. The only thing that bothers me a bit is that I don't see the real price because of the Heikin Ashi chart. So I added an option to the 4 EMA indicator. It is called Show Real Prices. And when you activate it, you see the real price, even here for the Heikin Ashi chart, as a purple dot. And now you know, here we can enter at this candle and you plan the trade to the previous low. And the condition for entering is that the risk to reward ratio has to be greater than 1:1. Then we can take the trade. This was an example for going short. Now let's have a look at a trade for buying, for going long. And in this case we are looking for a rising movement of the price. Price is going higher and then coming down again. So see here, this is the pullback. EMAs are squeezing together and then price breaking again above the 8 EMA, and this is where we can enter the trade. But for the buy side we are looking for the stochastics being oversold. Here you can see it below the 20, and this is where we can enter the trade. But again we have to check if it is really worth it, if the risk to reward ratio is above 1:1, and yes it is. In this case it is 1:1.5. In this simple strategy we take profit here, but an optimization is to stay in the trade and exit when the stochastics is overbought. This trade we can optimize to a risk to reward ratio of about 1:5. Okay guys, this is how I tested the strategy for the FTMO challenge. Of course there's never a guarantee that it works, but the test worked out pretty nice. If you liked the video and this channel, then don't forget to subscribe if you haven't already. If you have any questions, then add these to the comments, and I'll see you soon here on the Trading Guide.